In this role, I work closely with our founders to help them access opportunities that drive business growth and sustainability. Whether it's connecting founders to the right resources, markets, or mentors, we are here to support your journey. Today, we are excited to dive into a critical topic for SMEs: corporate governance. Good governance is the backbone of sustainable business growth, ensuring that your enterprise is well-structured, compliant, and ready for expansion. I am thrilled to introduce our speaker, Austin, who is a lawyer by profession and a seasoned expert in corporate governance. Austin will guide us through the essentials of governance for SMEs, and I'm sure you'll gain valuable insights that can be immediately applied to your businesses. Without further ado, please join me in welcoming Austin Ondaba. Wakili, take it up. Austin? Austin, Ondaba, are you there? Austin? My apologies for that. Let me quickly find out where Austin is. He was right here with me before we allowed you into the room. Apologies for that. Austin was having some audio issues, but he's joining on a different device. We'll quickly admit him. Good, I can hear you. You just said hello, Austin. You disappeared again.
Hello, good morning.
Hello, good morning. You might have to mute one device. Mute the device that wasn't working up.
Better. Thank you. Clearly, technicalities.
Good. Nice to have you now.
Asante sana. My sincere apologies. One device failed. I had to log into another. Good morning, everyone. Happy Mazingira Day. I want to trust we are all alive and well and ready for this session. My name is Austin Atandi. I will be taking you through this session where we dive into corporate governance. Clement, I will need your assistance in this instance because my presentation is in the other device, which has failed, rather the audio, it's like you can't hear me. I pray that you'll be able to assist by going through the slides from your side. Hello, Clement?
I'm trying to see if I can work it out. I was on transit, but I said I couldn't miss. Give me a minute.
Or,
I'm trying to share.
You're able?
Yes, I will be able.
Thank you. Apologies for disrupting your transition to somewhere else. So let's begin this session by just having a quick dive into the topic of the day. I'm here to take you through corporate governance, and I want to begin by a simple query to ourselves. We all survive, we all live, we all exist as individuals. Now, as individuals in our state as humans, we have activities around us that determine our pre-existence, that either feed us, give us nutrition, keep us fit, healthy-wise, help us relate to each other as families, as friends. Now, in that state in which you are as a human, there are things you have to do on a consistent basis that then help you transition and relate better to the environment or to your environment. And in this sense, your environment, I mean the people, the activities, the items, the things like buildings, houses, cars, and all that is around you, nature. So in your bid to survive and in your bid to coexist with your environment, these things that you do on a daily is basically you governing yourself. It is you governing your life. It is you controlling what you're doing. Now, going back to the topic of the day, corporate governance is simply that, governing a corporate. So, Clement, if you're able to dive into the first slide. Clement, are you able to share the first slide?
My apologies. My device. I'm using my phone. My device is taking too long. It has forced me to go back to log in Zoom. My apologies for this.
No worries. I know it's a public holiday, so everyone was busy multitasking and trying to do many things at a go to take advantage of the day. So then, as Clement tries to set us up, let's keep the discussion going. So the term corporate governance basically is a derivative of first the word corpus, and then governance. I'm sure we all understand what governance is. Governance is basically to rule or to lead, to guide. Corpus is a very old Latin word, which came from the meaning of the word, rather the definition of what a body is. Corpus, a corpse. So in the quest to come up with the definition of what an establishment or an association of people would be, back then, the Latin people, in their wisdom or lack of it, coined the word corpse into corpus. And as it transitioned, and then we had, the English, the Francophone, and all that. At some point, the English picked it up, and it became corporate. So corporate, diving back into the meaning of the word body, which at that point, the Latin didn't just utilize the word corpus for a dead, a corpse as we understand it in English, but it was more of the definition of an element, a definitive state of an element. So a body, whether alive or not. So corporate governance then comes from the word corpus. And in that long sense, there is no clear definition that we can say that the dictionary says corporate governance is this or corporate governance is that. However, the word corporate, as we understand it, means an association of body or persons. A body of persons endowed with the ability to operate as an individual. So basically, we have 3, 4, 5, 6 people, or as many as 100, if it's a public entity, that have come together with the aim of operating as one individual. Now, let's look at the word governance. Governance is basically the art of ruling, controlling through a predefined set of values, rules. We have systems. Look at who we are as a country. We are a state. So we have rules, we have systems, we have policies, and all these combined create what we call governance. Through a predefined system, we create a governance system. So corporate governance then is basically the governance of a corporate. Remember, we've defined a corporate as an association of body or body of persons, which seeks to operate as an individual. But this individual does not necessarily mean one person. This individual, as we will see down the line, means a set of people who've come together with a preconceived aim of achieving a particular or a desired state. This state could be anything: financial, social. So let's dive into what the main attributes of corporate governance then will be. These attributes revolve around the ownership and control of an organization. Now, I'm sure all of us here, we have joined this session today because in one way or the other, we have an organization somewhere, we have a system somewhere, we have an outfit somewhere that we are trying to improve, that we are trying to set up, that we are trying to work with other people for the sole aim of achieving a mutual desire, whether it's financial, whether it's social, or whatever. So the main attributes of corporate governance revolve around the ownership and control of an organization. For instance, a company. Now, for today, and for the sake of discussion, I'm not saying a company is the only state of corporate that we know. I will use a company in many instances for reference. Now, there is an issue where a company is questioned. So if today in your small organization, let's say you're a business name, or you're an NGO, you are a limited liability partnership. If today something happens within your organization, is answerable? Who comes out to give a statement and say, this happened or this didn't happen? And if this happened, then to this extent we are or we are not liable, or to this extent we take liability, you know. So the main attributes of corporate governance revolve around ownership, responsibility, and control of an organization. Now, moving deeper, we look at the separation of factors of ownership from the management of the organization. So what happens within corporate governance is we are trying to establish a form within which the owners of the company, the owners of the association, the owners of the entity that has been formed, and in this case, it could be anything. It could be a company, it could be a limited liability partnership, it could be a business name. Corporate governance comes in to try and set a form of order to separate you from that person you might have hired as an employee, you from that person who could be your financier, you from that person who is your investor. And down the line, we will see that there are 3 or 4 or 5 different aspects of corporate governance and the parties that come into play. Now, the main attributes of corporate governance, as I said, revolve around the ownership and control of an organization. Separation of factors of ownership from the management of the organization. The benefits of corporate governance include forming a critical basis or a criteria for investment, and through which this investment then assists in assessment and improvement of rewards in society. Now, this is going to be a very deep dive into a lot of things. Most of us are SMEs in one way or the other. In the formation of your SME, I'm sure at some point you thought about, how do I scale this SME from a day one SME where we're not making money and I'm supporting it, to a day 100 or a year 10 SME where I have investors knocking and asking me, we are interested, we want to come in, we'd like a share of your business. How do you transition that part? How do you move it from being your day-to-day hustle to being an entity or an organization where you sit back as a shareholder, probably appoint someone to represent you on the board, just as a director, and all you do is receive dividends? So corporate governance then comes in to help you factor all these issues into one and into making your institution, your organization, or your company into a successful, sustainable organization. Now, what are the forms of corporates that we know? That is slide 2, Clement, if you're able. What are the forms of organization or corporation that we know? Now, an example of a corporate outfit could include a limited liability company. I'm sure that is what we all know. A limited liability company where you've registered, probably you've done 100,000 shares, and out of this 100,000 shares, or a nominal capital of 100,000, and out of this nominal capital of 100,000, using the basic minimum that we all know, you've given 1,000 shares, each worth 100 shillings. So that each of these 1,000 shares multiplied by that 100 shillings then forms the 100,000 nominal capital. In this nominal capital that you have of 1,000 shares, you've probably given yourself 500 shares. You've given your friend, your spouse, your mother, your father, your sibling another 200 or 300 shares. You've given someone else another 200 or 300 shares. So you've split it across. What you've done is you've spread liability across. Let's look at an NGO. An NGO is a form of a corporate in this sense that it has a predetermined set of values that it wishes to achieve or to keep to or to align to. Now, through this set of values, it has a mutual group of people who've come together, and what they seek to do then is jointly espouse these values and drive them for growth, for development, for sustainability. You know, and NGOs, just like any other corporates, they're supposed or are expected to do returns and submit and say, this is what we've done for the year. Another example is trusts. I don't know if we've all heard about trusts, but a trust is an incorporation. I'm sure we've heard about incorporated trusts. Now, what a trust does is it gives you the ability to manage resources in a singular or individualistic manner as would an individual. So what happens is you could be 100 people, you could be a family of 10, you could be an organization of 30, but when you form a trust, then you are sinking all your resources into this form of the corporate that you formed, with and without its advantages and disadvantages. And you're saying, through this trust, we will espouse these values and we will advance this agenda. Another example is societies. I'm sure we all know about societies, the Law Society of Kenya. This is a group of individuals with a common vocational calling or a common social calling. For instance, Rotary, for those of you who know Rotary. So what then happens is you form a society for the sake of advancing your own agenda. And all these organizations, as we look at them, including our limited liability partnership, have their own advantages and have their own disadvantages. For today, I won't go much into them, but I would like to come back to our main topic. The attributes of a corporate include, so all these examples I've given as corporates, they have very succinct or very clear attributes. Number one, they have legal personality. Now, legal personality is the ability to go out and contract, the ability to speak, and the ability to appoint someone to speak for them, to be spoken for, the ability to own, and the ability to dispose. And in this sense, I mean assets, liabilities, and all that comes with them. That is the first attribute. Second attribute is adaptability. Adaptability in this sense, I'm talking about a corporate has the ability to transform. It has the ability to transform. So what happens is it can adapt to a certain scenario by either reducing its size, increasing its size, redefining its agenda. You can have, for today, for instance, you can incorporate a company and say, our main objective will be to build houses, real estate. And 10 years down the line, you can redefine that agenda. You can say, no, through an AGM, we are redefining. We are saying our main objective is to go into medical services. We're becoming a hospital. So you can adapt to whatever you want to be. That is the other attribute of corporates, adaptability. Third attribute is limitation of liability. And all these attributes down the line, you will see how they build into corporate governance. Limitation of liability. Now, let me take you back. You remember I gave an example of 100,000 nominal capital. So you've given your company nominal capital of Kenya shillings 100,000. And this 100,000, as we remember, as we discussed, we said you probably split across you and your family members or your friends. What you've done is you've spread risk. You've assigned liability. That in the event your business sinks and auctioneers come after you, this liability that you've predefined is to the extent to which you will be held. Again, today is not about the corporate and its ability to take or deflect liability, but that is one attribute of a corporate. Fourth attribute is transferability. You could be the owner of the company individually. You own the entire 1,000 shares, using my early example. And you could decide down the line that, you know what, I'm going to give my sister 100 shares and remain with 900. And I'm going to give my mother another 200 and remain with 700. So what you're doing is you're transferring. And that is another attribute of a corporate, transferability. Well, a corporate must have distinctive owners, must have workers, must have financiers. Now, why am I giving you all this? It's because down the line, you will see how these parties all come into play. You as an owner, you could be an employee of your own company. You could be the worker. You could be the financier. But all these elements have to be distinctively accounted for. The fact that you're an employee does not stop you from earning dividend of your own company. One, there's a hierarchical approach to how you will deal with all these factors. So you've set up a corporate, you are the owner, you have the entire shareholding, 1,000 shares. You've proceeded and you're the employee, you're the one delivering a service. Let's say you're an IT, so you're the technical guy. So you're visiting clients every other day and delivering a service. So they pay, you invoice and they pay. So you're the employee. And three, when the company needs to buy hardware to deliver to a client who is not willing to pay upfront, you go into your savings and you put in money. What are you doing? You're financing it. So you see, you're playing 3-4 different roles. But how then do you distinguish these roles from each other? Because each role comes with its own expectation. As an employee, you'll be expected to pay payee. You'll be expected to remit pension for yourself. You'll be expected to pay an HIF and SHA or SHIF, or whatever it is currently. So that is one distinct role within the corporate. Second role is a financier. You could be the one who gave in the money, or you could have gone to a third party, a friend, a relative, an international investor, a local investor, told them, I'm in need of 100 million. I need to deliver this hardware to this client. And they pump in the money. What have they done? They've financed you. Now, remember when I gave you an example of you've given out shares to maybe your sibling or your parent, that 100 or 200 shares you gave out have made them owners. So they're distinct owners of the institution. So what happens then is at the end of the year, they'll ask you, where are our dividends? So all this, together with the attributes of a corporate, we are now coming to the fact that through a corporate, various parties are availed an opportunity to contribute resources such as capital, expertise, and labor. For each of these parties, the view and perception of the corporate is different from the other. You could be the one party playing all these roles, but the view, in fact, the law looks at you at different angles throughout. There will be the labor issues, there will be the income tax issues, there will be the investment and returns issue, there will be the competition authority issues. So all this will be looked at from a very different perspective for each of the role you play. Now, why am I talking about one individual playing all these roles? Because then at that level, where you are the baba and mama of the institution, it becomes extremely impossible to not take through one hand while the other hand does not know what you've taken. So why am I saying this? Now, Clement, if you could go to slide 3. Slide 3 then goes into discussing why these distinct roles that you play as a corporate within the corporate must be differentiated. Now, as we talked about the issue of transferability, the limited liability, the personality that comes in decentralized management, I want us to look at, if you are the person playing all these roles, you are the financier, you are the investor, you are the worker, you are the tax person, you are the one doing the books. Is it really possible that you, in that state, will be capable of holding yourself accountable that you've not paid the income tax for September, yet your rent is due? So you've not paid your salary as well, yet government is waiting for pension and the social health. So all this build into what eventually we see as corporate governance. So through corporate governance, these factors need to be separated. So the practice globally has devolved or evolved into a level where, as you set up your corporation or your institution, for the world or for the parties out there, the third parties out there, the people you compete with, the people you deliver service and goods to, for them then to see that you are capable of sustainability, they would want to see you be capable of separating these issues we've discussed about and present them in different light, whether it's you who's doing it or not, but present these issues in different light and convince them that, you know, what I did here as an employee has no bearing at all to what I expect in dividends. So then corporate governance has grown to that, to come in and help achieve that. So the most basic explanation then of corporate governance is it is a mode of assurance. It is a mode of assurance, not just to you as the owner of the company, but to the third parties, the investor and the financier. It is the way through which you manage relations. It is the way through which you ensure systems, processes, and responsibilities are achieved. And not just for you as the owner of the institution or the corporate, but for the third party, for that banker who you've been asking for a loan. What assurance are you giving them? How do they know that this 100 million they've given you will come back? So through corporate governance, we're setting systems, you're setting laws, you're setting regulations, and you're promoting enterprise in a much more transparent way, where the different dynamics, the owner, the financier, the employee, are all able to hold the institution to account and say, now, you made 100 million in profit last year. As employees, we'd like our bonus. Out of this 100 million, the taxman will say, we want our 10 million of tax as income tax. The investor will say, I gave you the 100 million, I expect it back. So corporate governance is basically the establishment of rules, laws, regulations to promote enterprise, to ensure accountability, and to trigger performance. In summary, it is the mechanism through which the suppliers of finance or capital assure themselves of a return on their investment. Now, I could go deeper into examples. I don't know if we've all heard about Enron and the shenanigans that happened within it. But I would advise that read about Enron. Enron was a mega company, a multi-billion-dollar, a huge corporation that minted profits for its people, for its shareholders for a while. But how did it go down? Read about it and see how corporate governance plays around the issue of sustainability of a corporate. What have I said? I've ranted for the last 20 or so minutes. What am I saying? That as SMEs, we want or we desire to grow to the level of Enron at some point. We all set up SMEs, whether by default or not. And maybe you got fired. You start your juice biashara, selling juice to your neighbors. After 3 months, you realize they want more. They want peanuts. They want fruits. So you diversify. You start selling peanuts. You start selling whole grain. You start selling whole fruit. 12 months down the line, you realize, okay, I can actually blow this business into something bigger. So what is happening then is you are consistently redefining your business. And SMEs have that ability that we are not confined into one business. How do you transition that business from your one-man show over the last 1 or 2 years to an entity that the bank will listen to? Basics. Are you filing your returns? Are you reporting yourself? So that if you're the financier, the employee, the shareholder, the worker, and all that, are you reporting yourself? Are you reporting to yourself? And are you giving yourself a true picture? Because then without reporting, the aspects of corporate governance fly out the window. And in my closing summary, remember I said, corporate governance is the mechanism through which the suppliers of finance and capital, in this sense, really investors and financiers, assure themselves of a return. Even you, as the owner of the business, you're a financier. So how are you going to assure yourself of a return? By reporting. And corporate reporting is one thing that even you as a mama mboga, as a 10-year-old company, as a 100-year-old family or whatever company, you have to consistently report. That reporting is what builds into your corporate governance structures. That you file your KRA returns, you file your Sharia or BRS returns annually, you file your labor institutional returns, whether it's the pension, whether it's the social health and all that. So eventually, whether you're playing the role or you hired people to do it, these returns bring out a picture or a dashboard on which you get to see, am I growing? Number one. Number two, if I'm growing, am I remitting to each of these various factors their due shares? Are you paying the financier? Are you paying the worker? Are you paying, So through corporate governance then, once you have these reports on your dashboard, what you've done is you've established a sense of trust with all these parties. And once you have a sense of trust, especially with your financier and your investors, then your business can only go one way, up. I want to open this for a Q&A session. I don't want to take you guys into unnecessary legal jargon. So if anyone has a question, if you feel there's something I've not touched on, I've just done the basics of what corporate governance should be, but I'm here, I'm willing to explain. Asanteni sana.
Many thanks to Austin. Thank you for that presentation. It's a big, I think my major takeout is your summary. Corporate governance is the mechanism through which the suppliers of finance or capital to corporations assure themselves of a return on their investments. Apparently, that unnecessary jargon you're talking about, kumbe ina matter.
Yes, it does. Yes, it does. And especially to SMEs. Especially to SMEs. We start off as small, small entities, and we consider ourselves, we don't matter. No one really cares about us. But if you want it to matter in the next 12, 24, 36 months, you have to make sure you assure your financier and your investor a return on the investment. And there are many ways of doing it. But first, you have to be accountable. You have to be trustworthy. You build the trust through being accountable. You become accountable by reporting. So it's a cascading kind of scenario.
Wonderful, amazing. Any Q&A before we wrap it up from our guests, our participants? Many thanks for being here. We appreciate your participation. Might you have any Q&A? Any question to be answered? Any clarification? Any comments before I give it to our guests? I'd like to say thank you, Austin, for that insightful session, and thanks to all of you for your active participation today. We hope you found the conversation on corporate governance valuable for your business. As we wrap up, I'd like to invite you all to join us again next week as we continue exploring key aspects of business growth in our Founders Conversations series. Finally, if you are not already a member of SME Founders Association, I encourage you to join us. At SFA, we connect founders to money, markets, and mentors, giving you the tools and connections you need to scale your business. Thank you once again, and we look forward to seeing you next week. Before I close it, Austin, just kindly allow me, if you are in a position,
would you like me to do a final remark?
Yes.
Excellent. Thanks, Clement. So as we close, at our various levels, whatever we do, whether individually or as an organization or as a group, I want to bring it back home. On a daily basis, you go back home as an individual and you ask yourself, well, I left home with 10,000 shillings on my M-Pesa. Then you come back in the evening and you ask yourself, how much? You actually flip through your phone and you're like, okay, I only have 3,800 left. So you have to remember, where did I take the 6,200? That is you being accountable to yourself. That is you facilitating governance of your finances. Right. A corporate is no different. At the end of the day, when you come back home and your nanny or your house girl or your home manager or domestic manager and all that, and you find that they've not cleaned up and the dishes are all over, you ask, well, this dish is not done. That is you governing your worker. And at the end of the day, when you come back home and you find that email from your bank asking you, you borrowed 100K last month, you've not seen a payment. That is a financial aspect of your life being governed. So your corporate is no different. Ensure reporting, and reporting is the punchline. If you report, you are home and dry. Because one day, when someone walks in and tells you you'd like to invest, the first thing they'll do is ask you where are your books. And if they can't find your books, if you are 3 years over, they'll ask you where your books for the last 3 years. And most investors will ask that, where are the books for the last 3 years? And then you find that you have no records. You don't know how much you made over the last 1 month. You don't know how much you made over the last 1 year. Basically, you're lacking the basics of governance. So take time, make records, indicate if you're not an accountant and you don't have the ability to hire an accountant, just do simple records. I made these sales. Here I am. Today I've spent this on this. This is the much I've banked as my profit. At the end of the month, just do records and say, I've paid myself this much. The simplest of things. I'll give you an example. This week, a small SME owner called, and she was trying to acquire a facility from Equity Bank. She needed 200K. So they've asked her, show us records. And she sells shoes, you know. She's a simple lady. She sells piatu. And they've asked her, give us your records. And she realizes, oh my, I haven't checked my records over the last 1 month. So she has hired someone who runs a small shop for selling shoes. So I tell her, you know, your business is not your hobby. You have to separate the two. Your hobby and your business are completely different. If you want that business to grow, you have to dedicate, commit at least some time on a daily, where you sit down, you evaluate what the business has done, just the same way you'll get home and evaluate, was this house cleaned? Have my children eaten? Has my nanny been paid? Same way for your organization. Because at the end of the day, if you want it to grow, you'll have to be accountable to your investor and to your financier. Asanteni sana. I wish you the very best. At Ondaban Partners, we are open and ready to assist SMEs. Come in, speak to us. We offer a wide range of services, all the way from company secretarial. If you want your BRS returns filed, if you want guidance on how to do simple agreements with, you know, suppliers, investment, third-party engagements, talk to us. We are here for you, and we understand SMEs. We've worked with startup environments such as the NILAB, the iHub. We understand SMEs. Speak to us. We will be more than happy to come in and assist you. Asante sana. Have a good day.
Ondaba and Partners Advocates. Thank you very much, Mr. Austin. I'll give it one more highlight, one more takeout. Hey, you've given us good takeouts today. Accounts, reports, record them. We need to feel good when we're making the history of the business, of this corporate business. Thank you very much, Austin. In the briefest way possible, in the most brief way possible, if I may say. Let's go alphabetically. I see Catherine Karaoke. Catherine Karaoke, are you open to speak? If you're not, I'll be taking the next person alphabetically. Desire Kimanzi. Going once. Diana Caroline. Zayad Said.
Hello, everyone. Good morning.
Sorry, I didn't. Let me get back to you. Sorry. Go ahead. Go ahead, Diana.
Yeah, very insightful. Thank you. Yeah, I've enjoyed the session. Thank you.
Go ahead. You can introduce yourself. Let us know what you do.
I'm in agriculture.
Agriculture is broad. What specifically?
Oh, okay. Yeah, as you're saying, pivoting depending on the season. But a farmer. I'm a farmer.
Oh, nice.
Mm.
Nice to get to know you, Diana. Thank you for joining Founders Conversations today. Zayad, are you available? If there's no one available, is there anybody from SFA who would like to speak before we close?
Hi.
Leo, Eunice. Sorry, Zayad, go ahead. I won't
You
cut
can hear
you.
me? Okay,
Yes, I
good.
can hear you. Go ahead.
Thank you very much. Yeah, so good morning, everyone. My name is Zayad Alawi Said. I am a software engineer. I run Intrasoft Technologies Limited, a software powerhouse that focuses on providing technological solutions to financial services providers. So we provide softwares for microfinance institutions, SACCOs, and any other lending business. We provide the core banking system, mobile apps, internet banking platform, USSD, and we also do integrations with third-party applications and mobile money. So if you run a lending business, please reach out to us. Intrasofttechnologies.com is our website. And I'm going to drop on the chat our phone number. Thank you. Glad to be here. I've enjoyed the introductory session on corporate governance. And I'm looking forward to the other sessions. I believe we'll dive deeper. Thank you.
Nice to hear from you, Zayad. I need your number. There's a certain solution I think you mentioned I might be looking for from you. Nice to connect.
Yes, so I've dropped the number on the chat.
My appreciations. Thank you. It's 11 o'clock. I'd like to wrap it up. I know it's a public holiday. I don't want to keep you too much engaging on online. I'd like to appreciate you. Next week, we'll be having a similar session. My sincerest apologies. This was impromptu. I thought my phone would work. My laptop crashed, but next week we will not be having any technical hitches. We will be online, we'll be on time, we will be here for you. I appreciate you all. God bless you. Have a happy Mazingira Day.
Thank you very much, Clement.